Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Today, we saw a really wild and crazy day in the markets. PPI came out at 8:30 in the morning, came in hotter than anticipated, slammed the markets down. Then the markets clawed all the way back, had a little bit more selling pressure, and then we're starting to push higher again. So these markets are truly resilient. Part of my thinking process in this too, this is the week of options expiration. Tomorrow, there's a lot of contracts that do and will expire. So with that being the case, institutions likely are propping up those contracts to make sure that they capitalize on the most profit that they're capable of doing. That could be one of the reasons they're pushing it up, but we've also had some pretty big movers in the market today. First thing first, though, next week we will be changing where we're broadcasting the show. It's going to be over on the Verified Investing YouTube channel and also on our homepage, verifiedinvesting.com. It's no longer going to be on Gare Soloway's YouTube channel. So make sure to check us out, verifiedinvesting.com, for all of our latest shows, which all will be broadcast there. It'll be an easier one-stop shop for you. Okay, let's get into the market summary to see where we're going and what happened today. As you see here, Dow Jones up 0.03%, NASDAQ up 0.1%, S&P 500 up 0.17%, U.S. oil is up 2.12%, gold down 0.52%, and Bitcoin saw a nasty sell today, down $5,200, down 4.28%. After what was appearing to be a breakout attempt just got slammed down by investors, especially after that PPI data hit the markets at 8:30 in the morning. So, okay, let's jump into the S&P 500 heat map. We see here basically a mixed board because we fought back from being down so much in the morning. A lot of the stocks started turning green towards the afternoon. Amazon is one of those, had a great day, up 2.99%. Apple basically flat on the day, but that has recently broken out. That has received inflow of capital from some of these other high flyers that were down on the day yesterday. Although Palantir still down 1.73%, Netflix up 2.2%, AVGO positive, Eli Lilly up 3.73%. Nice bounce and rebound from that selling pressure that hit that stock most recently. So let's flip into the S&P 500, and you can see here we're still stuck right in between basically this megaphone pattern that's created from the top end of this parallel and the bottom end of that parallel channel. Price hasn't been able to fight to get up into the top end of the parallel channel yet. Let's look at the 10-minute chart to see price action throughout most of the day today and also yesterday. Notice this trend line, this declining trend line that's getting beaten right now as we go into the close. I'm going to show you one stock I think is really causing that, and that is Intel. Intel is now surging at the close with news about this administration in the United States potentially taking a stake in that company. So we'll get into that chart here in a moment, but really that's what's helping lift the spiders and mainly the SMH. Next up, we got the Qs. We see the Qs here also just basically traded down sideways for the day, but ultimately yesterday we confirmed the breakout on this inclining trend line. That makes this area support at 576.92, but we flip to the 10-minute chart here too, and you can see the Qs are faring just a little bit worse than the S&P 500 as this declining trend line we've tried to fight to get above on the 10-minute chart and have not yet accomplished that feat, but we have on the S&P 500. Interesting to see the different price action and strength on this index. Ultimately, though, if we do continue higher on the Qs, next stop is going to be up here right around 593. In essence, this $600 range would be a great target for price movement should we continue moving higher. Next up, the SMH. Look at that big green recovery candle, and mainly it's due to Intel, guys. Look at this move. Comparing that to the Qs, where this declining trend line, we had price still hanging out underneath this trend line, and then really it's just rapidly pushed right into the end of the day, pushing up higher on the SMH. But guys, we kind of discussed this the other day, right? If you look over there on the chart, right there, we confirmed into that parallel. So what does that mean? That means we likely are going to be going higher, at least for the near term on SMH. Now, there can always be bull traps. There can always be rug pull scenarios, but at least the probabilities for right now show that we still should remain elevated. Now, again, options expiration, we are in the middle of summer, so there's lighter volume. The prices can really be pushed to wherever those institutions want them to be pushed because of that lighter volume. So at least we are still moving up on the charts. So next up, let's take a look at the IWM. IWM saw some steep selling pressure at the beginning of the day today. Look at that big wick on the daily candle that you see. So we flip over the 10-minute chart and expand this out. You can see here we had a nice gap down, traded sideways for a little bit, then steep selling pressure, filling this gap over here. And then what do we have? We have a V-shaped recovery with consolidation. So we'll see if this rally continues. This is a beautiful push here on the IWM, and this consolidation implies to me that we're starting to put in a little bit of momentum gaining situation to allow us to move higher. Now, back to the daily chart, we did have this as resistance yesterday. That still will be a minor resistance should we continue to push up right at 229.30. The next stop, though, on the IWM is up here at 236 and 63 cents. Next up, Bitcoin. If you can have an engulfing reversal candle on a cryptocurrency, which you can't because they're 24/7 currencies, this would be an engulfing reversal candle. Look at this, knocking out the previous 3 trading days, now trading back within this green candle. What I'm watching here on Bitcoin, obviously we've got this declining trend line. That's going to be the first area of support, roughly right around $115,000. But also what I like to pay attention to are the sizes of the candles on the chart. Notice this big red candle on the chart. When's the last time we saw a candle about that size? And really, it's right here on the chart, July 10th. It's moved up right here. So the high end of that is 116,842. That area right now will be a little bit of a minor support, but should price get into the range of this candle, we're likely then going to be trading in that range for the near to midterm, simply as that's a bigger, more dominant candle that's going to dominate that range of price action. In essence, this big red candle will force price on Bitcoin lower. That's how these candles work. It shows and really reflects investor sentiment on any given day. And when one dominates in one direction or the other, that typically ends up dominating for the near term. So watch for price to get down into this candle's range, and then also for potential support for a small near-term bounce right around $115,000 on this declining trend line. Next up, gold really didn't have too much to report today. It is down 0.58%, but still consolidating in this bearish manner from this move down on this red candle to the side. So that tells me price likely is still going to be coming down, at least minimum testing this inclining trend line right around 32.96. Next up, silver also did retreat a little bit today. Ultimately, you could still call this inside this green bar consolidation. Now, we did step up. We did close up here above these pivots, which is a good positive step for silver to reach another new high on this in this year. However, this retreat today will put it in jeopardy if we don't see more consolidation. So tomorrow, if you're a bull on silver, you want to see price remain within this red candle and this green candle. And then the following day too, that will start giving it momentum to push higher on the charts. If selling dominates tomorrow, still looking at support at 36.58 on silver. U.S. oil, we noticed yesterday, U.S. oil did sell off and hit that support trend line that you see here on the chart, and has since now bounced back up. Notice where prices stopped today, right here at the bottom end of this big red candle, right at the wick. So we'll have to see in the coming days, do we get price action to move back up within that red candle? If so, we have the ability then to consolidate all within the range of that candle, which is a high of about $67.76, basically about $3.70 higher. That still will remain in a bearish pattern. Ultimately, the target for me still is down at $59 for U.S. oil. Next up, we got nat gas. Nat gas did have a decent bounce today, but it's still trading within the range of the candle yesterday. And also notice where it caught resistance on this declining trend line. So for the near term, we're nailing this level to a T. Right now, this is the main line in the sand for nat gas. We'll see what happens tomorrow, as obviously the distance is getting compressed and the price range is really reducing too. So we don't have too much more time before we either break back above or then get rejected and come to the target support area at $2.55. Next up, 10-year yield did also receive a nice bounce from this big red candle yesterday. Ultimately, still bearish consolidation, looking for that measured move down here to break that inclining parallel channel right down here at 4.095%. Amazon. All right. So Amazon, as you see here, had a beautiful day, and we're into the winners of the day here. Amazon, as you know, we reported about Cart yesterday. Amazon is expanding their same-day delivery service for groceries by 1,000 cities. And you can see the investors are appreciating that. That's obviously going to give Amazon some more opportunity for revenue and growth. And price today accelerated, pushed through this trend line. Looks like it's closing just slightly above this trend line. So for today, that is the resistance. We'll see if we get any sort of profit taking tomorrow, which would then trail price action along this inclining trend line, which is roughly at 231 and 31 cents. Should we break above, first and minor resistance will be this gap fill at 234, but ultimately then I see this target being hit at 241 and 52 cents, which is the higher inclining trend line that we did have a bull trap on before back in February. So that area could be retested. And if we retest that, we're going to potentially be talking about new highs here on the chart of Amazon. Next up, Reddit. Look at Reddit and its accelerated move over the last week and a half, 2 weeks of trading days. It's definitely overbought in the near term and is due for a pullback or consolidation at any given moment. However, look at this. We've got an inclining parallel channel potentially giving us insight to the upside potential on Reddit, right around $255 on the chart. So even if we do continue with this sharp inclining angle of trajectory moving up on the charts, that would be a fantastic shorting opportunity up here should we continue moving up without any consolidation. Whenever prices get extended, they typically like to react to a resistance area with a very similar trajectory, but in the opposite direction. Notice, very similar to right here on the chart of Reddit. We had a great move up, and then after that move up, without much consolidation, we saw a big steep sell on the chart. So that's very similar to what I would anticipate happening here on the chart with Reddit accelerating the way it is. So first areas of support, and this will be minor. The first areas, again, are always minor. It's the previous all-time highs over here at $230.41. It starts to become more solid area of support down here, basically in the $200 zone, 205 to 200. And then this will be the strongest support of the three down here at 181.78. Notice how this inclining trend line also intersects with that level. So that zone right here, 190 down to 181, will be serious support for Reddit should it start selling off and coming down on the charts. As discussed, we saw Intel really pushing up at the end of the day. We'll flip to the 10-minute chart here. Now, Intel was drifting higher. Here's the start of the day. We gapped lower and then traded lower for about the first hour of the day, then started floating up, and then the announcement hit the markets that this administration is likely going to be taking a stake in Intel. Now, notice too, after hours price action, $24.34. So pushing up even higher after hours. Now, you know what, guys? I've brought this chart up on Trading the Close in previous episodes. This chart right here has so much information on it. It faked everybody out with this big decline right here on earnings. But still, myself, I was targeting this, and I even wrote articles about this on our website. This is an inverse head and shoulders pattern. Now, we haven't negated the inverse head and shoulders pattern. We would do so by breaking down under the neckline and or trading under the head, as you see here on the charts. We didn't do that with this most recent decline. That told me every bit of decline there on Intel was a buying opportunity. Now, Intel's been a sticky stock over the last several months. It really hasn't gotten a chance to get up to where it has a major gap fill. Now, this might be the news that gets us there, because this inverse head and shoulders pattern has a targeted measured move of $28.48. You can see we never got anywhere close to that after this pattern triggered. So if I zoom back out on the charts also, you notice we do have a major gap fill back here at roughly $29. So that makes sense that this pattern is showing us we're finally going to get a chance on Intel to potentially fill that major gap that occurred back here in August of 2024. This is a really interesting play, one that could have certainly been a curveball for a lot of people that didn't technically know how these patterns work and where they break down. But ultimately, it was a test, and it did rocket back up, just like the charts and technicals tell us is supposed to happen on an inverse head and shoulders play. Really cool stuff on that chart, especially if you're a technical analysis specialist. Next up, we've got Coherent, COHR on the daily chart. You can see here had earnings reported yesterday after hours. They beat on both revenue and earnings per share. Guidance wasn't as best, but look at this. We just got slammed down on this stock today, down 19.61%. Notice this big wick. So it's telling me there's still a lot of investors wanting to get back into COHR. Notice, though, also where price ended up catching support. We've got a gap fill right here at $88.05. And when it hit that area first thing this morning, it really didn't look back and it just continued moving higher up on the charts. So ultimately, look at what's going on this chart. We've got a great breakout from this declining trend line. Price never retraced the neckline, but now we finally retraced at least to the consolidation that occurred right after the breaking of this trend line right here. So still right now, even this area would be a great buying opportunity, but save some room in case selling persists, as support down here at 75.25. This declining trend line will be the strongest for what I like to call a springboard bounce play, much like at the diving board at the swimming pool during the summer. You have a jump, come down, hit the diving board again. That's where you get the momentum and a big bounce springboard up effect on the charts. Ultimately, good sell right here on Coherent and great recovery from the lows on the chart today. Next up, we've got Deere. Deere did also report earnings, as you see here this morning, but they did beat on both lines. But again, guidance is one of those things really pulling stocks back in on the chart. So we look here, we had a gap fill that was filled just like on Coherent, and that was the low end of the price range today. Price has since bounced back up, much like the markets. Had the markets continued selling, I almost guarantee down here, this 460 level of support would have been tagged. So keep these on the radar. If the market then does start turning down, this inclining trend line, which is under 459.83 and 436.99, that zone right here is going to be very, very good support on the chart of DE. That trend line is roughly 446.53. Next up, we have ONON Holdings, which is a shoe company. As you see here, we did have earnings a few days ago, and then earnings really shot price straight back down on the charts. As you see here, now making newer lows in the most recent history. Now, obviously, this low here in April hasn't been taken out yet, but we're still making lower lows on this way down. So that tells me the likelihood ONON is going to be coming to this inclining trend line is actually high, which would be great support for this stock too at $41 on that trend line. Notice there's a gap fill slightly above that too, 41.34. Should this area pierce with this steep selling pressure, next support 37.63. So this area would be great if price continued to accelerate down, much like over here. Look at that acceleration down. Great bounce up. That's what you want to see on a stock if you're planning to take a swing trade. Next up, we've got Litecoin. Now, Litecoin, with a lot of the other cryptocurrencies, were really hit hard today when Bitcoin started selling, and that's evident right there on the screen. We were attempting to break out above this inclining trend line and really never confirmed, and then got rejected back down on the charts. Ultimately, we're back in this consolidation range. If you're a bull on Litecoin, you want to see price not go any lower than 119. 119 is maintaining this consolidation range, which then could build momentum for another attack of this inclining trend line. Should that area get broken, this declining trend line from this breakout would be the area of support right around 111.99 all the way down to 106.98, which is a significant level of support when you string it over to this other pivot high right here on the charts. Last up, we've got Apple. Now, Apple didn't really have a big day. Today, it's down 0.22%, but I brought this chart up because I wanted to highlight the fashion at which it broke out of this declining trend line. It has not yet retraced. So these are the levels of support at a breakout and confirming move. And then also think about this too, guys. We were talking about money rotation yesterday. A lot of the big high flyers had a lot of selling pressure on them. Apple is not near its all-time highs. We're quite a bit of ways from its all-time highs up here at 260. So we've got another 12% or so on the charts to go, but we've been really pushing up high on this chart in the recent term history. So now we're overbought on the daily chart. We likely will start curling and coming back in. Notice, again, this declining trend line will be massive support and a great buying opportunity for Apple. That's going to be under $220 at $218.25. First level of support, if you want to be a little bit more aggressive, is at 227.09. Be watching for pullbacks on Apple, as those could be buying opportunities for the future. All right, guys, thanks so much again for tuning in. Don't forget to like and subscribe to these videos. Again, we're going to be on the verifiedinvesting.com homepage next week, as well as the Verified Investing YouTube channel. Come check us out there. We'd love to have you there. No episode tomorrow. You guys have a fantastic weekend. Look forward to seeing you on the charts next week. Take care.